Real challenge for regulators both here and overseas to ensure the regulatory settings both support innovation and have that consumer harm protection element to them as well. So one of our strategic aims is obviously to promote confidence in capital markets. It's hardwired into our legislation. So in terms of megatrends, whether we're talking about robo-advice or potential for blockchain technology, fintech, these sorts of things heighten our need to do a bunch of things, particularly in the strategy and risk function. For us, it's keeping our eye on emerging trends and issues, staying really well connected with overseas regulators, looking at how they're approaching new products, new technologies, innovations, sharing information on harms in markets, and in terms of regulatory responses to those harms, what has worked, what hasn't. I think the task for both policy makers and regulators is to really think ahead, what policy and regulatory responses might be needed to support innovation and help it to thrive, rather than innovation being constrained by perhaps outdated regulatory infrastructure. So that's a big focus area for us.
The capital market is changing very rapidly, and the potential to change very rapidly. So the things that that I see changing in the next 5 to 10 years, a real breakdown of the geographical boundary that's currently sat around, how do we do something in New Zealand versus doing something in Australia versus doing something in the States. That's just disappearing, and that requires a specific response, I think, from our regulators to think about how do we regulate across boundaries rather than regulating geographies. And there's no easy answer on how that's done. Simone touched on my big topic of the moment, the blockchain technology, and where that might be going for capital markets. And I think the interesting thing there is there's a lot of the changes that might come out of blockchain which will be driven by the market, but there are a lot which won't, and there are specific areas where we need regulatory input into how the market might look. And those, they might be around things like, well, what is a digital identity? How do we work out what digital identity is going to mean in the future, and how do we regulate that, and what might that mean for anti-money laundering regulations, for example?
Technology is changing the way that we do business, and one of the features of the way that technology is evolving is that everything is change is happening very quickly now. So things can the characteristics of the way you do business in a particular industry can change in a relatively short period of time, and that means that both we as a business need to be flexible, but also we're wanting the regulator to be flexible with us, I guess. The globalisation, again, in the financial markets is a huge theme at the moment. One of the issues that we face in New Zealand is that we are a relatively small economy, and the cost of some of these new technologies, is quite large, and we need to find a way of making that work in the New Zealand context.
We're really fortunate here to have a brand new regulatory infrastructure, if you like, in the Financial Markets Conduct Act. It really is our innovation hub, so it's particularly flexible around the lighter touch startup pieces of our financial markets. So it's technology neutral, which is not so much, I guess it's quite a unique feature of New Zealand, really. And I know we've seen in Australia, they've set up a technology hub, whereas here, we're probably not needing that so much because our legislation is particularly flexible. Certainly that means that we need to be a lot more proactive, though. We need to be connected to the market. We need to be open to having conversations with early startup businesses, for example. So that changes the style and nature of our regulatory approach, and also changes the nature of the capability within the building. So that's certainly something that we're evolving towards as a matter of necessity. There's a lot of old-fashioned stuff we do, just talking to people. We put a huge amount of emphasis on stakeholder engagement, really understanding our market participants, businesses, for example, sending our people out and about. It's less about monitoring, more understanding first what the business drivers are, what the challenges are. So you'll see much more proactive engagement from us than you might have seen perhaps in Securities Commission days. So that's certainly a change for us, but also we need to recognise the challenges that our market participants are facing themselves with digital disruption, and the only way we're going to understand that is to have that dialogue. So certainly a lot of these things are customer driven, and we need to get a deeper understanding of those factors.
Have learnt and are learning how to collaborate better, and I think we've learnt that if you don't collaborate, the answers are not always good. And I think we could, not talking about the FMCA obviously, but I think we could point to some pieces of our legislation that haven't come out quite as we might have wanted them to, and we've had to go back and have another shot at them. And so learning that collaboration piece has been really interesting. And I think that as you start to see innovation occurring more quickly. And so if we want innovation to flourish in our markets, and we really do, then we need regulators, it's not just the FMA, but the suite of regulators, to be prepared to allow some risks and do some collaboration.
One of the problems the regulators have is there's that kind of asymmetric incentive, basically. There's no incentive to say no. There's no incentive to say yes, but if you say no, there's no accountability. And I think one of the things that actually all of the regulators, probably in New Zealand, need to look at a certain extent is their own kind of accountability. How do they look back and say, did we get the settings right? Well, in fact, it's probably not them looking back. It's probably somebody looking back at them and saying, did you get the settings right? The thing we've got to be careful of for the next 10 years is that in raising the bars, we don't crush a whole bunch of fantastic ideas and small businesses that would otherwise have thrived. So, and that's a really difficult thing to get right.
So for us, it's making sure we're looking across the full suite of regulatory tools. If there are rigidities in the framework that are not going to best support a startup, what other tools have we got? Can we designate a product out of the regime? Can we call it back in with a limited set of obligations? Those sorts of things. So we actually need to be quite bold and brave as well. And that's certainly a mindset change for some of us, and it's something that we need to keep working on. I guess for companies to get the benefits of some of the lighter touch regulatory pieces in that legislation, they need to have a framework and a regulator that is open to that. We're not really isolated from the market as we perhaps were at some stages back in our history. Certainly that's not the style and approach of the modern regulator.
It would be interesting to see how that actually changes the submission process around the work that you're doing. Instead of it being a one-to-one relationship, how do you actually open it up so everyone can see the comments that are being made, and instead of everyone spending 2 hours each writing a submission where you effectively say the same thing, what if you could actually just see the comments that everyone's making collaboratively on the changes or whatever you're planning on making? It'd be really interesting, and that's not just with you, that's actually with every government department. I had one department recently send me a 20-page document and ask for feedback, and it was a PDF, and I was like, can you put this in a Google Doc and then share it with everyone that you want comments from? And they told me that that wasn't allowed.
What we're actually seeing at the moment is the data without the tools. So we're seeing the ability to gather the data. We're not yet seeing good tools for using that in an intelligent way. We're starting to see that a little bit, but really not that many organisations using the data, even that they've got, never mind the data that others have got when you put it together. You could have some form of blockchain technology being used where you get, instead of double entry accounting, you effectively have triple entry accounting, debit, credit, and stamp to the blockchain immediately. And then, an audit is effectively happening on an ongoing basis through the year, and nothing can ever be changed through that process.
I think regulation does a couple of things
For startups, in whatever sphere, it gives some stability, gives a framework, but in terms of your customer, trust and confidence, it gives some assurance that there are some minimum standards that have been met, and I would say that because I'm a regulator. But in terms of market integrity and market confidence, I think those things are really important, but we just need to make sure we're right sizing them for the proposition.
experimenting with a totally different way of allowing innovation to happen. So for example, in Singapore, MAS are looking at a regulatory sandbox where the regulator and a new company effectively get together and design together what's going on, so that by the time they finish their design process, they're not having to go to the regulator and say, is this okay? Do we need to go and do it again? You know, it's actually been happening through their very, very early stage design process.
Right.
And, you know, that requires a little bit of a rethink about how we might do that. But we're a real small company, a real small country with you know, a relatively small number of regulators. There are still quite a lot, but you know, there's a relatively small number of regulators. We should be able to work together in those types of ways and actually see if we can get some different things happening through that. Part of the reason that that is so important is you have no way of guessing what's going to come out of innovation, particularly when you start to talk about disruptive change. You just have no sense of what's coming out the other side, so you can't sit at the other side and go, this is what we expect. You have to work with the companies that are doing it.
We're not going to know what the new innovations are and what you're considering launching next quarter, for example, unless you talk to us. So I think there's still some sectors of the market that wait until they have the shiny new product before they have the conversations with us. Very happy to have those kind of conceptual conversations. We certainly do it in the capital market space, you know, ahead of an IPO, when you're laying out the deal and you're not quite sure how the financial structure, for example, might fit within the regs. You know, we have all those sorts of conversations, but I think perhaps at the more innovative end, you know, I just emphasise early collaboration with us and have a chat to us about what your plans are.